Failure is not always a mistake. It may simply be the best one can do under the circumstances. The real mistake is to stop trying. B.F. Skinner. My friends, every day, 10 to 15 minutes, that is all we ask. Thank you for the new Patreon members this week and the book buyers. God bless you all. We appreciate it. I'm feeling better by the day. I appreciate all the good wishes. Started the week off not feeling so well, but again, interesting week in the market. How did we end up on Friday? Everything up, including Bitcoin jamming up 6.77%. Those of you who jumped into Bitcoin on that latest weekly vertical crossover, I guess you're feeling pretty good about it last Friday. Somewhere around the 43,000 mark, somewhere up to the 48,000 mark during the week. And again, I'm looking at these figures based upon my Heikin-Ashi candlesticks. I'm not going to sit here, switch back out to the regular ones. They do read a little different, but somewhere in there. Anyway, successful so far. So pay close attention. Let's just start with Bitcoin. What the heck? We had that weekly vertical crossover, price percent oscillators pulling away from the red signal line, derivative oscillator heading up, nice green up candle, wick on top, higher high, moving in the right direction. What's the 2-day showing us? Well, we had seen things slide sideways, then this last 2-day candle bumped up quite nicely on us. Price percent oscillator heading up. Derivative oscillator, which is the leading indicator, the triple smooth version of the relative strength index, which is what the derivative oscillator is. It's still what would we call that? It's still devolving. It's unwinding. So we'll continue to watch. It means that what's happened is the speed of the increase in price has slowed markedly. That's probably a pretty good way. You know what I'm going to put at the end of today's video? I'm going to put the training that we have on the derivative oscillator, exactly what it is, how and why we use it. Of course, it's covered well in the book. If you don't have a copy, we have an autographed copy for you. Follow the link in the show notes. So that's where we are on the 2-day on Bitcoin. What about the half-day? Well, that's where we get an even closer view. So we go from a weekly, which is 5 days of movement, or 10 half-day candles, the 2-day, which is, of course, 2 days of movement, 4 half-days, and then we get to the half-day itself, and that's where we can see those bigger charts play out on an intra-day basis, and we can see where things sort of spun around, popping up, losing a little bit, popping up, losing a little bit, and then, of course, on Friday, jamming. Not enough to cross over going up on the price percent oscillator, but that derivative oscillator lost a lot of downward momentum, and that price percent oscillator is heading up nicely. So that's where we are as far as Bitcoin goes. Those of you that jumped into that practice trade, I hope you're happy with it so far. But again, if that's your first time practice trading Bitcoin, you have a lot to learn. Stick with it. Be sure to be filling out your trade worksheets every single day. Very important. I'm going to also put at the end of today's video a link to our training on the trade worksheet, how to fill it out and use it. It will supercharge your training and help you learn by doing. Okay, let's go to the S&P 500. Ended the week with a red spinning top open box. Means, of course, a slowdown in the up movement. We can see that with that up movement today, the price percent oscillator still negative, got a little closer to the red signal line. Derivative oscillator's positive and about flat for the week. And we go to the 2-day. What do we see there? We have 4 days of down movement. We had that 2-day recross going down. And of course, this latest 2-day candle moving right down that 2-day trend line. Derivative oscillator flipping over to negative. Half-day, we can see where things had, again, topped at the beginning of the week, moved down during the week, and then slowed down in that down movement on Thursday afternoon, popping up on Friday, piercing the half-day, piercing the 2-day trend line at the end of the day, actually closing out of it. Still don't have a crossover going up yet. So again, pay close attention. See, again, What can be seen from these price movements? 2 days particularly important. Weakening of the weekly is also important. Make sure you don't see significant weakening there. There's not much between the lamination and the signal line. Makes it very difficult. What do we like best? Well, of course, those of you who are Patreon members, you got your 20 weekly vertical crossovers. We like those that really fly away from the red signal line when there's a crossing. Those make you feel the best. This market, as they continue to pump liquidity in by just printing dollars, then what do you expect? Real things cost more, because real things have real value, and the more dollars you pump into the system, the less valuable they are. Consequently, you see inflation, and that could be one reason for a lot of what we see in the stock market. Regardless, we're going to use that to our advantage, the fact that we can read charts, and we're going to do our thing. Okay, let's look at where the Qs ended up at the end of the week. We gave you a potential warning. There might be a weekly vertical crossover. Didn't happen. Qs up for the day 1.04%. By the way, the S&P was up 0.77%. And as we told you, Bitcoin up 6.77%. But what do we see at the end of the week? We can see that the weekly trend line's been violated, closed outside that doji, lots of indecision, tending down. Price percent oscillator still positive, derivative oscillator still positive, losing momentum. So we'll continue to wait, watch, and see how this plays out. The 2-day, of course, we had that 2-day crossover going down back on Monday, the 2nd of August, then popped up for 4 days and then sort of slid sideways. And these last 4 days, we had sideways sliding for, well, almost really 8 days after things hit its high, then 6 days, and then these last 4 days down. We have a red spinning top right now, lots of down movement and up movement there. Price percent oscillator is a little less than flat, holding right above that 200 period moving average line. Derivative oscillator gaining downward momentum. And look at the half day. At the end of the day, ended up being laminated. So we saw where things, again, just continued to slide sideways and bump down. And then, of course, Thursday afternoon, that again started a little bit of up movement, and then up Friday morning and afternoon. So we'll keep an eye on things. Didn't have that crossover going down on the Qs yet, that weekly vertical crossover. Maybe by the end of next week, maybe not at all. That's where we are on the Qs. Let's go to TLT 20-year bonds. Ended the week with a red up candle. Green up candle. There's no red up candles. We see the price percent oscillator heading up, derivative oscillator losing upward momentum. And again, what have we been waiting for to see if there was going to be a 2-day recross going up after 6 days of up movement? Not enough momentum to cross over yet. Maybe that'll happen by Tuesday. Why would I say Tuesday? Well, if the markets are open Monday and Tuesday, and this is a 2-day candle that just finished drawing, then of course it means that we need 2 days to complete that candle before we have a candle. Just because you see a crossing over and a candle's not finished drawing, you can't act on that. So candles aren't candles until they finish drawing. Now we're happy to jump in 10 minutes, 15 minutes before they finish drawing on a 2-day or a weekly candle, but not a day before. So we'll continue to watch and see. Derivative oscillator losing downward momentum. Like I said, price percent oscillator's negative, getting closer to the red signal line. Half day, we see where things popped up in the morning, lost a little bit in the afternoon. Overall, only up 0.07%. What was also up 0.07% for the day? Gold. Same as bonds. Doesn't really mean anything in particular, but that's what happened. Gold still in a confirmed down move. Price percent oscillator heading down. Derivative oscillator for the week, losing some downward momentum, but still negative. Green open box candle, a very little one. No wick on the bottom, wick on the top. And after 2 weeks of strong down, well, particularly the prior week's strong down movement in gold, It's nice to see gold trying to hold a little bit of its own. What's the 2-day up to? Well, it's trying to move up some. Derivative oscillator still negative, heading up. Price percent oscillator heading up toward the red signal line. We have a red open box, which is a slowdown in the up movement. That's the way we ended the week on the 2-day candle. And we look at the half day, we can just see all that sideways sliding with that bump down in the afternoon on Thursday. And again, price percent oscillator still positive, derivative oscillator barely positive. So we'll watch, wait and see. Hopefully at some point we're going to see gold just zoom up, and I'm going to be ready for it when it happens. It will happen sometime. That's where we are, folks, as we end the day on Friday. Just gave you the complete rundown, everything you need, again, to fill out your weekly market worksheet. I'm going to give you that training on the trade worksheet on the derivative oscillator at the end of today's video. If you're not a subscriber at chartingwealth.com, you need to be one. That's free, and you get the PDFs for the daily market, weekly market, and trade worksheets every day, plus a special training that we put out every day. We have a special one for you today. This one's on market sentiment, a very good one. If you're not getting it, it's because you're not subscribed. Go ahead and subscribe. It's free. That list is never spammed, never shared. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.